So from a risk monitor point of view, I could preempt for a week or two. Can't get follow through. I'm too far away. Personally, my risk tolerance is too far away from the more neutral stance I should be in based on the algos that I've developed and work with it. Protect my capital. This is the ARMR Report. Algorithmic risk management research. It's about risk management. Everybody can find an idea that goes up. It's about holding on to capital when things get ugly that separate the average investor from the great investor over time. It's about not being that guy that says, well, I'm down 50%, but I'm a long-term holder. That's not the guy we want to be. We want to protect assets and then capture upside when we can. So I share with you this morning that I am on the razor's edge, cutting my portfolio down aggressively and forcing myself to carry about 30% treasury bills in the portfolio at all times until the risk monitor goes green. I'm 100% long now. I have to get to 30% treasury bills. I may do that first thing this morning. I may wait to see how the morning plays out. Let's talk about that. How would I get to 30%? I would take every position in a portfolio and cut it down an equal amount to create the cash. That way I'm not favoring any one thing. I'd have the same positions from a percentage point of view for my investable assets, but I'm going to have cash in that portfolio. The risk monitor goes green. It'll be an end of week thing. It won't be a Monday. The market's able to break through those key levels to confirm the move higher in the big index. In the weighted indexes, I'll put my cash back to work. There'll be a whole bunch of ideas we can put money in. Here's 3 examples. When the risk monitor's yellow, the first thing we don't do is add new risk. We don't add new risk when the risk monitor's yellow. The second thing we do is we carry a cash position. I'm not doing that right now. I need to do it. That's the important piece of information from this morning's call. You want to know when we should be doing that? I'll share it with you. Here, look, here, okay? Right in here, this is where we should be doing that. See down here, that green box? That's when the risk monitor went green in November. That's where you add all of your risk. That's where you get aggressive, quite frankly, when you feel most uncomfortable. Okay, you want to do it again? Here's where you do it. So you have the rip higher, the first pullback to test the 50, and then you get another risk monitor green. Load the boat. You're buying everything you can get your hands on. Rips higher again. Up here, you don't do it. This is not where you look to put more risk on. This is where you look to manage risk. What's the worst thing? Market keeps skyrocketing. You make a little bit less because you're carrying a cash, because you missed that idea over here. So what? You've had a huge run. You've been doing this with me since 2020. You've gotten real good at putting a lot of risk on when the risk monitor goes green. We're getting real good at that, you and I. But the bookend of that is knowing when to manage that risk and not losing sight of where you are in the market cycle. I'll talk about Bitcoin now. Okay. So there's 2 things that I was reading over the weekend that really disturbed me. I was watching what was going on. These are anecdotal. The risk monitor's yellow. We're already addressed that. Now I'm going to share with you 2 things that are anecdotal that really disturb me about the market. 1, cryptocurrencies. Cryptocurrencies have for a long time been the canary in the coal mine of risk on assets. Okay, Bitcoin and cryptocurrencies are not a replacement for gold and silver. They don't act like that at all. They are risk on assets. When the market begins to go risk off, the first thing they do is beat up crypto, and the market follows. It's been like that a lot, and vice versa. Crypto's skyrocketing, the market's ripping higher. Okay, something is seriously wrong with Bitcoin. It's down 5% this morning. The rest of the crypto, I put up a chart, I think last week, of the rest of the cryptocurrency world. They're like imploding. And now you have a chart, and this is just one of the ETFs, right? The biggest one, IBIT. Bitcoin, iShares Bitcoin. So the hype about ETFs was in fact just hype. I did share with you my personal opinion that ETFs on Bitcoin are a terrible thing for Bitcoin. I've been a precious metals investor for a long time. I know what they do with ETFs on an asset. They use it to manipulate the asset. So the age of these heady gains and rips higher in Bitcoin, I don't think are possible. Long term, is Bitcoin worth more? Okay. Maybe, but at the rate of change that you're used to in Bitcoin, never going to happen. It's too easy for governments to totally squash the entire thing. It's just too easy. I've seen it over and over again in gold and silver. Why anyone thinks it'll be different in Bitcoin, I don't know. But we could debate that another time. Let's just look at what the price action's telling us, okay? Something's not right about risk assets. Bitcoin has made a huge pennant, and is now gapping down 5% out of the pennant. Just read and react, guys. Just read and react. Don't debate it with me. Can it reverse and go back up? Oh, okay, sure it can. And I'll be the first to tell you, wow, what a great breakdown and reversal. Let's get on Bitcoin. I'm happy to do that. But today, right now, at the open, that's a god-awful chart pattern with a 5% breakdown. Those are my thoughts this morning. If you have any questions, ARMR Insiders, 9:30, we'll get the live stream started. When I carry more cash in a portfolio, it allows me to carry trade more. We're killing it carry trading. So 30% cash in portfolios, and I'll use that cash to carry trade. Great. So I'll see you guys. We could do that. ARMR Report subscribers, again, could throw a question in the comment section. I'm happy to answer it when I can during the day. You're on your own the rest of the day. I'll see you tomorrow, 8:45, let you know how we've changed the portfolio. You can always, like I said, put a question here if you need to ask me something. And of course, if you need a little more communication, want to work closer together, feel free to pick up the phone, call me. We can always chat about that. Everybody have a safe trading day out there. At the end of the day, everything I've shared with you, I hope resonates and you figure out how it fits your risk tolerance. At the end of the day, make your own decisions and be the smart money. Have a good day.